In this session, we would be working out another numerical on the preparation of cash budget. The question goes like this. A newly formed company desires to prepare a cash budget for 4 months from March to June. So which means the budget that we will have to prepare, it will be for 4 months, March, April, May, and June. The following information is available and that they have given us some details. The details which have been given to us covers sales, purchase, wages, overhead. Now, or in this, we know that sales is a receipt, purchase, wages, and overhead, these three items that will make up your payments. Then let's look at the additional information that is given to us. Cash balance on 1st March 2020 is rupees 10,000. New machinery is to be installed at a cost of 20,000 in the month of February, which is to be paid in two equal installments in March and April. 12,000 is to be collected from the bank in March as interest on deposit. Period of credit allowed by creditors is 2 months and allowed to customers is 1 month. 50% of sales and purchase are for cash. Delay in payment of wages is half a month. Overheads are paid in the same. So based on these details, we will have to go about with the preparation of the cash budget. Let me just walk you quickly through the format of the cash budget. In this question, we've been asked to prepare the cash budget for 3 months, which is 4 months, starting from March, April, May until June. Then as we all are familiar by now, we have opening cash balance, then we have cash receipts, followed by the cash payments, and then we have the closing cash balance. So this is the typical format of the cash budget. And next, what we would be doing is, as a thumb rule, we would be at first fitting in all the items, following which we will go about filling in the, post this, we will go about filling in the values. Now let's look at the question and let's look at the conditions which has been given to us. We've been told in the question that 50% of the sales and purchases is for cash. What does that mean? 50% of the sale that you're carrying out is for cash and the remaining 50% is for credit. What is the credit period that has been allowed to your customers? For sales, the credit period is 1 month. So here's the breakdown. If you sell goods worth 100 rupees this month, 50% would be settled for cash. The remaining 50% is on credit. That 50% credit would be settled after 1 month. So this is how it goes about. So let's look at it. Let's fill in those particulars. Cash sales, 50%. So what we can do is we can put it like this: sales and cash sales of 50%. Okay. Then we have sales, which is credit sales at 50%. So these are the two items that we have with respect to the sales. Now in the month of March, okay, in the month of March, your credit sales is 28,000. So 50% of 28,000, what will happen? You will be settling in the same month, which will be 14,000. In the month of April, the sale is 36,000, and out of this 36,000, you will be settling in the same month, which is 18,000. May, it is 30,000. Of 30,000, 50% you're settling in the same month, and similarly for June. So June, it is 40,000, and this 40,000 you will be settling in the same month, which is 50% of 20,000, which makes it 20,000. Now we have to move on with the credit sales. Condition for credit sales is 50%. 50% with 1 month delay. So in the month of March, you would be settling the 50% of credit sales which happened in February. So February's February sale was 22,000. Of this 22,000, you will be settling 50%, which is 11,000. Now, in the month of April, you will be settling the credit sale for the month of March, which is 14,000. Month of May, you will be settling for April, which is 18,000. And in the month of June, you will be settling for May, which is 15,000. So we are done with sales. We saw sales has got two parts. You have cash sale and then you have a credit sale. Next what we have is you have to collect 12,000 as interest on deposit. So there is interest on deposit that will be coming to you as an income, and this income is a one-time income, and this income would be coming to you in which month? This would be coming to you in the month of March. So this will be 12,000. Now this is not coming to you the other months. It's only for the month of March. Now let's add up the total cash receipts. So we have to add up these three, and that will be 37,000 for April, for March, April, May, June. We have to calculate the total. You just have to add up these. That will help you fetch the total cash receipts. So that is in picture. Okay, we've got that in picture. Okay. Now let's move on with the cash payments. What are the cash payments that we have? Cash payments that we have is for purchase. Now purchase, please remember, the conditions are quite similar. You will have to settle in for your purchases. Again, has got two parts. You have a cash purchase of 50%, and then you have a credit purchase of 50%. Now there's a slight change with respect to the credit purchase. Well, what is the difference? The difference is this. The difference is that 50% of purchase, which is happening on credit, it is settled after 2 months. So which means 50% of your credit sales, it is settled, the cash payment is settled only after 2 months. Okay, now let's first work out the cash payments for the month of, for the cash purchases over here. So cash purchase for the month of March, it was 14,000. So 50% of 14,000, which is 7,000. Here it is 50% of April, which is 22,000. It's 22,000, which makes 11,000. Here it is 20,000. So which is 10,000, and finally you have for June. In June it is 25,000. June it is 25,000, which is 12,500. Then you have credit purchase. Credit purchase for the month of March. Credit purchase for the month of March. March you will be settling the credit purchase for the month of Jan. You will be settling for the month of Jan, which is 20,000. 20,000. So this will be 10,000. April, you will be settling for February, and 50% of this, which will be 14,000, and that will be 7,000. March, it is again 7,000. Then June, you're settling for April, and April's 50% is 22,000 of 50% of 22,000, which makes it 11,000. So we have completed with respect to the purchases. Now let's look at the other expenses that we have. The other expenses that we have is with respect to wages. Okay, wages I'll come back a little later. Then you have overheads. Overheads, what has been told to you is that you're settling overheads in the same month. Overheads you will be settling in the same month. So March you will be settling for March itself, which is 4,300. Here it's 4,500. Here it's 4,100. Here it's 4,300. Now we have with respect to wages. Wages, the condition is that there is a half-month delay. For wages, there is a half-month delay. So which means, what does that mean? So maybe for you to understand this, let's look at it like this. First Jan's wages, you will be settling after half month, which means for first Jan, the payment will be made on 16th Jan. Second Jan, okay, what will happen with second Jan is that the payment for this will be made on 17 Jan. 3rd Jan, payment will be made for 18 Jan. And the list goes on. Okay, list goes on. So if you keep going in this manner, what you would notice is that finally, by the time you reach 15th Jan, by the time you reach 15th Jan, or let's say 16th Jan, 16th Jan, you will be settling on 1st of, will be settling on 1st of February. 17th Jan, payment you'll be settling on 2nd, payment you'll be settling. You'll be settling on 2nd of February. 18th Jan, you will be settling. You'll be settling on 3rd of February, and it goes on like this. So, which means tentatively, Jan 1 to 15. Okay, this you will be paying towards the end of Jan. Okay, to this you will be paying. The payment for this would be made between 16th to 31st, and 16th to 31st Jan, this you would be making in first week of February. So this is more or less how the delay happens. Okay, this is more or less how the delay would be happening. So for us to ease down our calculation, the logic that we have to remember is, in the month of March, you will be settling for the first half of March, you will be settling in the end of March. And for the end of March's wages, you will be settling for the next half. So what we can do is, this is how we can write it. Wages, first half, and then wages, we can put it as second half. So March, in the month of March, you will be settling for 50% of the wages for the month of February. Okay, so you will be settling the second half wages for the month of February, which is 4,400, and half of that is 2,200. Here, second half of March, you would be settling the wages for first half of March, which is 2,300, Then April, first half of April, you would be settling the wages for second half of March, which is 2,300. And then here you would be end of April, you will be settling the wages for first half of April, which is 2,250. Similarly, in the month of May, okay, you would be settling for the second half of wages of April, which is 2,250. May, you would be settling the wages for first half of May, which is 2,050. Here, June, you would be settling the wages. First, in the beginning of June, you would be settling the wages for second half of May, which is 2,050. And then in the month of June, you would be settling the wages. In the second half of June, you would be settling the wages which was supposed to be paid for the first half of June. So that is 4,150. So wages we have completed. Now there is some more additional information that was given to us in the question, and the additional information was that there is missionary cost. So there is missionary payment that you have to make, and the payment you have to make in the month of there was 20,000 that had gone as missionary cost in the month of February, which has to be paid as 2 equal installments, and that will happen in March, and that will happen in April. In the meanwhile, someone has just brought to my notice, apparently, there's some issue with the April wages. Oh, right. Yeah, thank you for bringing to my notice. I'm afraid I took the inputs from overheads instead of wages. Okay, so let me just quickly correct that. So second half of April, you will be settling for first half of April, which is 2,300. The same thing will happen over here. And in May, here it should be 2,000. And then here it should be 2,000. And then here it should be 2,250. So it was my mistake because what I did was I referred to the overhead expenses instead of wages. Okay, so with that, we have completed the expenses. Now we have to calculate the total cash payments. And let's just do that. Let's just add up all our payments together. And that would be yes, yes, it's supposed to be 2,500. Thank you. Thank you. Yes, I've corrected that. Thank you so much. Okay, so with that, we have computed the total cash payments. Now, let's go about calculating one by one. We know that the opening cash balance for the month of March is 10,000. So if 10,000 is your opening cash balance, let's calculate the cash. Let's calculate the cash available. So this will be 10,000 plus 37,000, which will be 47,000. 47,000 minus your cash payments, and that will be 35,800. So which will be 11,200. So 11,200 will be your opening balance for the month of April. So April 11,200 plus 32,000, that will be 43,200, and 43,200 minus 37,100 is 6,100. 6,100 plus 33,000, which will be 39,100. 39,100 minus 25,400, this will be 13,700. 13,700 plus 35,000, which will be 48,700. 48,700 minus 32,300, that will be 16,400. So this is your closing cash balance, and we have completed with the preparation of the cash budget for the month of March, April, May, and June. Thankfully, it is all positive values for us.